Is Bank of America going bankrupt? That was the thought I had in my head when I saw this week they announced literally $130 billion in unrealized losses on U.S. government bonds they own. JP Morgan announced they had a $40 billion unrealized loss. Citibank, $25 billion unrealized loss. What does that really mean? Okay, when the Fed raises rates, bond prices go down. Now, these banks, they own billions and billions and tens and hundreds of billions of U.S. government bonds. So the Fed has been raising rates and the price of these bonds has been going down. And some researcher has looked into this, and they found that this is the biggest devastation in the bond market since 1792. They went all the way back and found that out. Now, why is this happening? Well, it's all about the length of the bond, the maturity of the bond. The longer a bond is, the longer it is, the more dates to maturity, the more sensitive it is to interest rates. So, for example, if you have a 30-year bond, the Fed moves rates up a little bit, the bond will go crash. If you have a 2-year bond and the Fed moves rates up, the bond won't crash, it'll just go lower. So basically, these banks hold tens of billions of dollars in these long-term to maturity U.S. government bonds that they thought were safe, and the Fed raises rates and these bonds have crashed. And right now, I've heard some people starting to call for a TARP 2.0, because basically, how much higher can these interest rates go before these banks are in serious net capital trouble? And we already saw earlier this year with Silicon Valley Bank and all these other smaller regional banks that basically weren't guaranteed by the U.S. government, their equity, because of the Fed raising rates and their unrealized losses on their bond portfolio getting crushed, they were forced to go out of business. It's only a matter of time before that starts to hit our big money center banks like Bank of America, JP Morgan, and Citibank.